Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on June 27th. It's Thursday, June the 27th, and the year's 2019. Let's talk trading. Oh, I see I have a slight typo here. And as I correct this, yesterday I asked the question, how many indicators do you need? But then I got to thinking about one of my favorite sayings by Anthony Robbins. If you want better answers, ask better questions. And then I just heard something this morning, and then I had to do a little research on it. And it was most important question. And I got to thinking, is it really how many indicators? So a better question might be how many types of indicators? Because there's, not all indicators are created the same. And I've talked about that before too. But then I got to thinking, most important question. What is the most important question? And you see, when it comes to trading, what's the most important thing to do? Not lose money? Make money. Follow your trading plan? Execute it properly? See, these are all things that are important. But what's most important? You have to decide that for yourself. So if you're thinking, well, what is it I'm trying to do when I trade? Of course you're trying to make money. Why else do you trade? I mean, unless you're just trading for enjoyment, just pure enjoyment, and you don't care about whether or not you win or lose. But I think most of us, we want to win and we want to make money. So if if the most important question is really, how do I make money? Then when it comes to indicators, it might be, will this indicator help me make money? Now, you might have to drill down a little bit more in that question too, because I mean, there's many different paths. One indicator might alert you to a trade opportunity that's on the horizon. Another indicator might tell you, hey, this is the time, right here, right now, get in that trade. Another indicator might tell you, price is about to reverse, and if you have a profit, it might be time to, take your money off the table. So, but how many types of indicators do you need? That's a question that you should ponder. Because, there's oscillators, squiggly line type indicators, and my answer, you need 0 of those types. There's plenty of horizontal line indicators, and which one do you need? So I'm going to, well, first, of course, no matter what indicator or how many you use, you have to have your money and risk management in place. It's just that simple. Because you don't want to lose, right? You don't want to lose all your money or most of your money on one trade. No, you only want to lose the amount you're willing to risk per trade. But I'm going to jump through the charts here because a trader asked me about the TROHHMM indicator. And I hope we're talking about the same indicator here. We got the TROHHMM lines indicator. And that's an oldie but goodie. I do believe it's an oldie. Let's see. When did I write this one, or when did I compile it? Okay, about 2016. That's probably when I updated it. I don't remember when I originally wrote it, but all it does is, and I guess I should show you the inputs. It will plot the high and low for a particular date and time. That's pretty much all it does. And you can also, if you want, you could even put the midpoint in there and the open and the close. And it just shows you where these levels are. And as you can see, once again, they're horizontal lines. And basically you want to trade when it comes in here, you want to trade the exit. So price gets in here and it comes down, and you can see here how for some strange reason you can see action around the midpoint. And I've got it set to my favorite time, which is 1400, based on my broker and where I live. So I'm using my broker's time, but you can set this to different times. So you can see here, we are now looking at the high, low, and midpoint of the 0800 bar or candle. But it's simple, real simple. Nothing complicated about it. And for some people, that's all they need is this one indicator. It gives them a few lines to look at, and they can trade. So you really don't need that many indicators. And so I hope that answers the question for the trader that wanted to know about HHMM. If not, let me know if that's not the one you were talking about, and I'll answer that question in a future video. And then there was another trader that this was interesting out on the Facebook world. I mentioned to them that they should just stick with one pair. And they were saying, well, if I can trade, I should be able to trade any pair. And then a few fellow traders said, TheRumpledOne kind of has a point there. You should, really stick with trading one pair and learning the characteristics of that pair. And I've told people that, back in my stock trading days when I got away from doing the stock de jour, stock of the day type of trading. What's the hot stock today? Which one's moving? I got away from all that noise, and I just picked one stock that was a cow, meaning if it went, between 10 and 20 cents from the open, chances are it would go 50 cents or more. And I was trading, thousands of shares at a time, so every dime move was worth $100. And so that's what I would do. I traded Apple, I don't know, for a year. Google, probably, I don't know, 6-8 months. I traded Taser for a solid year. I mean, I was so good at Taser, all I had to do was look at the clock. I knew at 6:37 a.m. my time, Taser was going to reverse. I mean, it was like clockwork, and it was happened more often than not, and I reaped the benefits. So, it's kind of like you don't need to trade a bunch of different pairs, just like you don't need a bunch of different indicators to trade with, because if you really think about it, the reason you put a trade on has nothing to do with the outcome of the trade. And once you internalize that, and it becomes a part of your thought process, and you couple that with your risk management, then you'll have confidence to put that trade on. Because well, worst thing that can happen, I'm going to lose what I'm willing to lose, but, based on statistics, I believe this is a chance where I can make some money. So you can see here, there's a few nice, small breakouts at first, then you have a nice one here, then it's like, uh-oh, you thought maybe this big bar would get filled, and you went there, no, and you stopped here at the midpoint, reversed here, made your money back, and then some, and that's just pretty much how you trade. So you see this, I went back to 624, but I mean, you could do this, pretty much for any day. I just picked that. You could go back to, well, we could just do it from yesterday, or we could do it from today. Today's the 27th. And you can see, once again, you pick that bar and you just trade accordingly. I mean, it's not anything difficult. And the thing is, you see, somebody could go, oh, well, that's hairy hindsight, blah, 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 right? But the reality check is you can do this right now. I mean, you could put it on the current bar, and whatever happens, it's going to probably break out of that bar. You know, right here we've got about, a 10 pip range. And you know from the price action screen, right? And we've got to set 10 pips that, if it starts, if it opens in one area, usually it's going to leave that area. Might come back, but chances are it will leave the area. And you can see this over and over and over again. I mean, the tighter you make these areas, the higher the chance that it's going to leave. But then you could say, well, it could reverse on you. Well, that's true too. But we could look at the frequency distribution here over the last 100 bars. You can see only 37% of the time does it stay within the 0 to 9 range. Because if it starts inside and goes 10, you know it escaped. And even here, it could start near the upper or lower extreme and travel this many pips and escape. So, but just based on the frequency distribution, you've got what, 63% of the time it's going to be 10 or more. There you have it. And you say you've got an average range of 12 pips. So it's just simple analysis like that can allow you to use simple indicators and just trade off the price action. But let's look here at the weekly chart, look at an update. You can see we've got 1, 2, 3, 4, 5 that haven't filled this week, and tomorrow's Friday, so we got about a day and a half barely trading. We pushed up, made new high. We pulled 44 pips off of that weekly high right here, pulled back 44 pips. And the buy zone, this was the pivot. You see here we had a short bias and the short trigger really didn't work. Here we went here 2, 3 times. Should have probably scratched that trade. Say, well, if it's not going down, then maybe it's going to go up. A nice trigger here in the buy zone. A pro trigger if you wanted to take it. Then you see here we got another short trigger happening as we speak. Larry live trade. Still haven't filled that pivot. Only 3 pairs over 100. You can see we broke the daily wick zone here. There was a nice 26 pip opportunity. Now we're coming out of the upper wick zone. Right now, anybody taking that trade is 8 pips to the good. Einstein line, you can see here, not much happening. We've already went over the range, and price action, once again, if you use the semaphores, you had a 3 ball at the top, red at the line. You've got a 2 ball at the bottom, took that green at the line right around the 50. It didn't make it. Maybe you've stopped out, maybe you're riding. And you see what happens next. So that's it, fellow traders. How many types of indicators do you need? Well, you might need one to alert you. Might need that a trade opportunity is possible. You might need one just to tell you where price is. You might need a horizontal line. In my opinion, you don't need a squiggly. But it doesn't matter what indicators you have or how many you have, because it's not what you trade, it's how you trade it. So go out there and drain the banks.